Hello and welcome. You're watching Global Business Report here on News9 Live. A very good morning to all those who've tuned into this broadcast. I am Krishna Kumar and I'm going to take you through the top business stories from across the world. And we begin our top story this morning, which is on Wall Street. Wall Street was in the red due to multiple factors, mainly because US Federal Reserve Chair Jerome Powell's remarks, which sent ripples through the financial world. Powell's comments seem to have left investors across the world uneasy, and that resulted in Wall Street ending the day in the red. US markets falling for the third straight session as all key indices fell up to 1% each, and the drama didn't end there. Tesla, the electric vehicle giant, also faced a rough ride with its stock tumbling. Here's a detailed report of how Wall Street traded on Wednesday night.
U.S. stocks seesawed to end lower on Thursday, with shares of Tesla down sharply and Treasury yields surging after Federal Reserve Chair Jerome Powell spoke about monetary policy and investors worried whether rates would stay higher for longer. The Dow shed 0.75%, the S&P 500 lost more than 0.8%, and the Nasdaq dropped just under 1%. Powell said at the Economic Club in New York that U.S. central bankers were moving carefully on policy after aggressive rate hikes last year, but he added that the economy's strength and continued tight labor markets could warrant further rate hikes. Wall Street's main indexes soared, then slumped after Powell's speech, something Eric Lynch, managing director at Scharf Investments, called a microcosm of the past year.
The market's been kind of like, stumbling around trying to figure out what's happening. Is there a recession? Is there not? When's inflation going to come down? I think what Powell said today was continuation of the same message. It was therefore both positive and negative. Positive in the sense that he referenced, solid growth. Negative in the sense that he said, probably there's still more work to do.
Treasury yields rose further, and the benchmark 10-year note yield was at a 16-year high of almost 5%. In company news, Tesla shares plummeted more than 9% a day after CEO Elon Musk said that higher interest rates would hurt demand for electric vehicles. Netflix shares jumped more than 16% on the heels of third-quarter earnings results, in which it said it added nearly 9 million users and announced a price hike for some of its plans in the U.S., Britain, and France. And shares of American Airlines rose just under 1% after the company posted upbeat quarterly results.
Now, we're talking about Tesla over there. Tesla's enigmatic CEO, Elon Musk, issued a stark warning regarding the state of interest rates. Musk said that high interest rates could sap electric vehicle demand, and that sent shockwaves across all auto companies' shares on Wall Street on Thursday. Tesla, the world's most valuable automaker, down more than 9% and is set to lose about $70 billion in market value. And this caution about high interest rates from one of the most influential figures in the world has sent ripples through both Wall Street and Silicon Valley, leaving investors, industry experts, and the general public on high alert. More details in this Reuters report.
Shares of Tesla and other electric vehicle makers plummeted on Thursday, a day after Tesla CEO Elon Musk warned that high interest rates could sap consumer demand. The world's most valuable automaker sank more than 9% and was set to lose about $70 billion in market value. On a post-earnings call Wednesday, Musk said he wanted more clarity on the economy before ramping up a planned Tesla factory in Mexico. His concerns? High borrowing costs that could deter consumers and, quote, paycheck-to-paycheck pressures on American workers. The comments marked a change in tone from Musk, who last year said his company was, quote, recession resilient. The EV maker missed quarterly revenue estimates by the most in more than 3 years, despite hefty price cuts. Tesla is not the only EV maker worried about demand. General Motors this week said it would delay production by a year of its Chevrolet Silverado and GMC Sierra electric pickup trucks at a plant in Michigan. Ford last week said it would temporarily cut one of 3 shifts at a plant that builds its F-150 Lightning pickup trucks. The automaker in July already slowed its EV ramp-up, shifting investment to commercial vehicles and hybrids. And EV startup Lucid reported a near 30% plunge in third-quarter production this week, while Amazon-backed Rivian, which makes electric pickup trucks and SUVs, also disappointed investors this month when it shied away from raising its full-year production forecast. Shares of Lucid and Rivian were down roughly 3% and 4% respectively in Thursday afternoon trading.
Looks like it's not just EV makers that are down. In a major restructuring move, Nokia, one of the pioneers of the telecommunications industry, is set to slash up to 14,000 jobs as the demand for network gear experiences a significant decline. This decision sent ripples through the tech sector, raising questions about the future of one of the industry's most iconic players. More details in this report. Have a look.
Nokia workers face massive job losses. The Finnish telecom group said Thursday it will cut up to 14,000 posts to reduce costs. Nokia said third-quarter sales were down by a fifth due to weaker demand for next-generation 5G equipment. Quarterly comparable net sales fell to about $5.2 billion, missing estimates. The company called the market challenging and said it didn't expect a recovery soon. Net sales were down 40% in Q3 in the North American market, which Nokia calls its most important. Both Nokia and rival Ericsson have endured slower sales in the US. They've tried to offset this with higher sales in India, but it's a low-margin market. Nokia aims for savings of up to $1.26 billion by 2026, with around a third of that amount to come next year. However, despite Thursday's negative news, the company did not cut its full-year outlook. Nokia shares fell as much as 5% in early trade Thursday, before recovering some ground.
Now, Nestle, the multinational giant renowned for its diverse range of food and beverage products, is facing an unexpected challenge as the company missed its 9-month sales estimates. Now, this setback has caused the corporate landscape to rethink, according with investors and industry analysts closely monitoring the situation. As a precautionary measure, Nestle has temporarily shut down one of its production plants in Israel because of the Israel-Hamas war that's raging on over there. Take a look at this report to understand what exactly is going on at Nestle.
Nestle posted lower than expected 9-month sales growth on Thursday, but the food giant said it expects volumes to turn positive again by the end of the year. The packaged goods industry has hit consumers with higher prices over the last 2 years, which it's blamed on higher input costs. But that put shoppers off buying Nestle products this year. Nestle, which makes Kit Kats and Nescafe coffee, said organic sales rose 7.8% in the 9 months ended September. That was below analyst forecasts. One leading market watcher called Nestle's results slightly underwhelming as the market expected more on volumes. However, Nestle confirmed its full-year outlook of organic sales growth between 7 and 8%. Investors and analysts have raised concerns that companies are pushing price rises too far, particularly during a cost of living crisis. They've recommended they focus more on marketing and innovation. Executives have said in recent quarters that costs are rising at a slower pace, but they also warned that shoppers would continue to pay more for products like soap, toilet paper and coffee. They say it's because companies still haven't recouped years of damage from higher expenses.
Now, will your Indian Netflix account get costlier? Well, Netflix has just announced a substantial price hike for its subscriptions in the United States, Britain and France. Netflix also delivered an unexpected twist in its user growth numbers. The company has not only defied expectations but has shattered them, reporting numbers that no one saw coming. So, what do these developments mean for you, the viewer, and the streaming industry as a whole? Watch this report for more.
Netflix is raising prices again. In the US, the top-tier ad-free plan now costs $22.99 per month, up by $3. The changes were rolled out Wednesday alongside an earnings report that also announced Netflix's strongest quarterly uptick in new customers since health crisis lockdowns began in 2020. The video streaming giant gained 9 million new subscribers globally in the third quarter this year, hitting a total of 247 million by the end of September. That increase far surpassed analyst estimates and sent Netflix shares soaring in after-hours trade. The subscriber gains came after a crackdown on password sharing, while Netflix also touted successes from new shows such as the live-action remake of manga series One Piece. Legal drama Suits, starring Prince Harry's wife Meghan Markle, also became the most-watched title across the US after it hit the platform. Netflix told shareholders it sees increased opportunities to license more hit titles. It now forecasts a fourth quarter revenue of just under $8.7 billion, slightly below expectations. The writer and actor strikes prompted the firm to revise its projections on content spending. It now expects to spend $13 billion in 2023, down from an earlier estimate of $17 billion, assuming the studios reach a settlement with striking actors in the near future.
And those strikes in Hollywood are causing huge chaos. Santa Claus will not be coming to Hollywood this year. Dear Santa, a comedy by Farrelly brothers about a young boy who accidentally sends a letter to Satan instead of Santa, will not reach theaters this holiday season. It's one of the many victims of a prolonged strike that has set the US entertainment industry reeling from one of the longest work stoppages in its history. The strike has entered its 14th week, and the industry is scrambling to get films out. Next year's film slate has been delayed, and the delay in the return of primetime television comedies and dramas is creating all kinds of chaos. More in this report. And that's all we have time for on this edition of Global Business Report. Thank you so much for watching. This is Krishna Kumar signing off. Keep it with News9.
China won't let us rest easy on our borders, but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it.
It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody.